everyone. Welcome. Thank you so much for joining us today for this great roundtable we're about to have with our great partners at Vouch. My name is S. Famajere. I am the program manager for FFA. So we're really excited to have you all here for this very important topic that we will be discussing today. We're joined today by Amanda Sandoval-Carvajal. So I'll tell you a little bit about her. She's from Vouch. So Amanda is a senior insurance advisor at Vouch with over a decade of experience in assisting both seasoned businesses and startups with guidance needed to excel at their current stage. She currently specializes in venture-backed and tech-based startups with professional interests in fintech and SaaS companies. As a first-generation Latina, she graduated from Purdue University. Also, Amanda sees the value in Vouch, the powerful disruption it has made in the industry, and is truly passionate about sharing this with female entrepreneurs. So we're so happy to have Amanda here leading the session, and feel free to ask questions in the chat during the session as they come up for you. We'll be sure to address that, and Amanda will look in the chat too to see if there's anything relevant, but we will be having a Q&A afterwards as well. So with that, I can hand it over to Amanda.
Awesome. Thank you so much, Amanda and Maddie, for pulling me into the FFA partnership. I'm truly excited to be here. I have such a huge passion for educating, women in tech, women founders, in the space that I'm passionate in, insurance, which I know isn't everyone's passion. So hopefully get to share something that resonates with you and that you get to take away today. So before we jump in, as mentioned, there were some pre-submitted questions. We will be addressing those at the end of the session, but please feel free to ask questions throughout the presentation, drop them in the chat box, and then we will wrap up the presentation with that. So S gave a really wonderful introduction. Thank you so much. My preferred pronouns are she and her. So yeah, that is a little bit about Amanda Sandoval-Carvajal. Before we jump in and really talk about the insurance component, I first want to talk about the risk associated with owning a startup. So as a female founder, you have 4 key strategies. You can avoid, mitigate, accept, or transfer your risk. You can avoid the risk in the first place. With this, you basically are making decisions that ensure you won't encounter scenarios or risk that are going to fall poorly on your business. With that, you may prohibit growth, which is something that, of course, we all want to grow. So not the best strategy, but we get it. 2, you can mitigate the risk. You can take action or make plans to decrease the chances of the likelihood of a risk or a claim occurring. A great example here is, you're having an employee handbook or an HR manual in place with standard policies and procedures of how you would like your employees to essentially follow. 3 is you can accept the risk. You can essentially do nothing and really be willing to take on that chance. Something might happen, something can happen, but you're prepared to deal with any potential consequences or litigation. And then the 4th one, which is my personal favorite, you can transfer the risk to an insurance policy that will help you take some of that burden off of yourself and essentially place it to a policy here. So as I mentioned, we're going to be talking about that 4th optionality that you have. And then we're also going to be chatting a bit about the 2nd one, mitigating the risk. We're going to talk about that later towards the end of the session, but we'll have some good pointers for you guys there as well. So bad things happen to good startups, unfortunately. And when does insurance truly matter? It matters when things go wrong. And while you may be thinking, Amanda, I am a first-time founder, my risk is super small. Unfortunately, litigation can come into play at almost any point, and having the proper coverage in place is super important. I'm placing an emphasis on proper because we'll learn that even if you have coverage or some coverage in place, having the wrong type of coverage is the same as having no coverage at all. So insurance has really never been more important. And we've seen in the industry trends in our current remote world that show the volatility is accelerating, and business litigation is unfortunately on the rise. It's on the rise for founders, it's on the rise for startups across the board, in areas relating to their employees, to directors and officers, and especially highlighting bold flashing lights to cyber. One thing that I do want to point out on this slide that I think is an important takeaway is that in the remote world we're currently in at the moment, there have been massive spikes in cybercrime and wire fraud. So if your platform or product holds or stores any type of sensitive data or critical information, you do want to make sure you have the proper protection there, to make sure you're protected properly. It's almost gotten to the point, and I'm sure a lot of us can agree, it's gotten to the point where, you open Twitter or your preferred news source and you see major issues that occur in the cyberspace. So definitely something to be aware of as you're approaching, your launch, that cyber claims in general are up, and huge spike here. The people who are counting on you to have the proper coverage can look like employees, customers, investors, lenders, and landlords. There will be different milestones in your company's build out where insurance is going to be most important. So we'll be chatting more in depth about these 5 key focuses. But I really, again, want to put an emphasis on customers and investors as well. Oftentimes customers, they'll have contracts with specific insurance requirements that you'll need to meet. We see these daily, and most recent, in fintech, which is one of my preferred specialties, we see a laundry list of requirements, 4 or 5 different coverages before the company even starts transacting business with, this client or customer. We see that a lot in the fintech space with Unit. Maybe some of you are familiar with that, but though that is one of the contract holders that have come across my view anyway, that are requiring a ton of different coverages. Investors also with the D&O, it's always something good to have proactively, which we'll talk about more here in a bit. This slide essentially is just showing what the cost might look like as you grow and as your needs scale and change. You'll notice, contractual requirements are going to be a huge contributing factor. And at Vouch, I always take the approach that it's better to set the standard for your company's size and profile instead of waiting for the contract holder to essentially tell you what you need. It can be costly. And when they're requesting 5 million in coverage, when it doesn't make sense to have that 5 million in coverage, you definitely want to note that and make sure you know what it's costing. So a quick legal disclaimer here, insurance is a very regulated industry. It's rarely cut and dry. You will hear a lot of us in the industry say, things like it depends, or sometimes, or if this or if that happens. As I mentioned, super highly regulated industry. It's important to have transparency with your carrier, with your broker. If that's Vouch who you decide to work with, we always offer one-on-ones at the initiation of our working together, and also throughout any point in time when you feel you might need more coverage. So just making sure that your carrier or broker understand your business and that they're making the proper recommendations according to your company's size, company's profile, and of course your classification and industry. So the first milestone we are going to chat about is employees. Obviously, employees are super critical to your business, whether they are on the 1099 contractor side or whether they're signed on as W-2. When I think about your risk when it comes to employees, it falls into 2 categories. the risk of them being on the job, and then two, the risk associated with employing them. The first one would be addressed through workers' compensation. And then the risk associated with employing that individual falls through employment practices. So we're going to briefly go over workers' compensation here. It is mandatory and mandated in all 50 states. One thing I will say that it is super easy to roll into with your payroll provider or PEO if you are working with one. If you aren't or haven't really thought about that because you're pre-employee stage, something good to kind of just think about ahead of time. How do I want to approach workers' compensation coverage? It is important to have, as I mentioned, as you hire your first employee, to avoid any sort of fines or penalties. It provides protection essentially around employee injury, whether they're on the job or at a company-related event. Vouch actually had a summit last week, which was super fun. I got to meet Maddie at Vouch here for the first time in person. And say, for example, someone were to get injured walking back to the office or hotel from an event. You may be liable to cover that type of loss because they are out for a company outing. One of the trends we've seen in the remote world, I'd say is, and just world in general, because a lot of employers are now willing to hire employees outside of their base location. A big trend we've seen is if there is a company, say, for example, based in California, but have employees in Washington or Utah, it's important to make sure your workers' compensation policy is set to cover the individuals in those locations as well. So just something to think about there, and definitely to keep top of mind as you approach that employee growth. Employment practices liability is probably one of the coverages that I recommend most often to startups in general. It's really relevant to any startup that has over 5 employees. And I would say relevant to, unfortunately, any startup with even 1 employee if you are in a highly litigious state like New York, California, or Illinois. If you are in those states, I'm sure you're familiar with employee law a bit, and you can probably agree that these states tend to favor on the side of employees when it comes to employee-related claims. It covers things like improper hiring or firing practices, allegations of discrimination, failure to promote, wage dispute, along with other types of claims coming from prospects, current, or even past employees. I speak with a lot of founders that say, I don't have any W-2 employees. Does it cover independent contractors? Because I do have some of those, working for us at the time. Employment practices does cover independent contractors. So always something good to keep in mind. Oftentimes I hear also, Amanda, I love my team. I trust them. They're great people. And I don't think I really have a risk around this. So not to be used as a scare tactic whatsoever, but last month alone, Vouch saw at least 5 unique EPL claims within our own client portfolio. So these claims are happening. And there are reports that state 35 to 40% of businesses will face an EPL loss at some point in their business history. It's surprisingly relatively inexpensive in comparison to the litigation costs that can come out of an EPL claim. Those can range in settlement alone from $75,000 to $125,000, not including the cost to defend yourself or your startup. So again, this is one of my personal favorite coverages to recommend. I think it's very important, especially if you are in one of those states. Let's move to the next slide here. So next milestone we're going to be chatting about is the banks and landlords. It's relevant coverage that is required by banks and landlords, and it can look like general liability or business property. It typically comes into play when you're signing up for a bank because they're wanting to protect assets that they have in the bank for you. for landlords, landlords will also say they want to make sure they have protection while you have third parties on their premises. Both policies can be very beneficial to obtain initially as you're starting out, and cost-wise can range anywhere on the low end from $200 to $300 here with Vouch. And of course, as I mentioned, can be very beneficial. So we'll start with general liability, that first one that I brought up here. It is a fundamental coverage, probably one of the first that you'll be required to get, and it's known as slip and fall coverage. This is for when someone is injured while they're on your property or rented space, and will most often, as I mentioned, be required by your landlord. We have a partnership with WeWork. They are also requiring, general liability, some property coverage to access these co-working spaces now. So whether you are fully remote or you have a brick and mortar location or you're at a co-working space, it may make sense to have some general liability coverage. With NGL, there are things that are covered like damage to premises rented and products completed, which can be very relevant for a company that has a hardware component to their tech software, or even an e-commerce company. Recently, actually, I brought on a woman-founded startup that takes the paintings of other women artists and turns them into puzzles for the purpose of display. So they wanted to make sure that they had that products completed operations coverage, because that coverage is what assists in the instance there's a bodily injury or property damage that is caused by your product. So for example, a purchaser of their puzzle has a small child who tries to eat a puzzle piece. In turn, that client of theirs or the consumer of theirs sues because their child choked on the piece of puzzle. The client would then, submit a claim around the general liability where the products and completed operations is there to help. It can also be helpful for individuals in the beauty industry or fashion industry. Say, for example, you have a manufacturer overseas. This manufacturer ships your product to you and you're distributing, making your sales. All of a sudden you have an email in your inbox that says, hi, the dye bled onto my skin, causing a reaction. That would be addressed through the bodily injury property damage piece of general liability. Second piece of general liability, or BOP, which is the business owner policy, is the property portion. This assists in protecting assets owned by the business if they are damaged in fire, or there's water damage, or even if they're stolen, which is super important in the remote world here. If you are working from home and currently have a full remote setting, say, for example, you have an engineer who's working on a super expensive laptop that's owned by the company. They spill their coffee or water or drink of choice, and it destroys their laptop. That is what is meant to be covered by business property. So also, if you're an e-commerce company and you are interested in covering your inventory, business property would be what protects that inventory from damage. And also, can someone let me know if I'm okay on time? Just drop it in the chat so I can make sure we're keeping on pace. Thank you so much. Customers, which is a huge, pretty huge milestone that is going to come up in your business history. It's super relevant to coverages like air and emissions and cyber. These are oftentimes written on the same coverage form, and rightfully so, as they work hand in hand to provide protection around your operations. When I think about the types of companies that I recommend, specifically cyber and air and emissions to, they're things like consultants, fintech companies, health and wellness, law, commerce, PR, SaaS companies, basically you name it, and they might need some cyber and error and emissions at some point in their business history. Specifically, I would say, starting out, if you are holding or storing any personal identifiable information on your platform or product, or you are a true software, or you have a true software exposure, that you are at risk for a cyber breach or cyber attack, you should definitely be considering some cyber coverage as initiation part of your insurance portfolio. Coverage here is going to protect your business from incidences like failures and liabilities in your product, data breaches, financial insolvency. So say, for example, you have a product that is mission critical to a company's day-to-day operations, and you have a breach due to a bug in your code. You are offline for a few days and you have a client that cannot do their work because you're offline. There can be penalties and fees associated with you being down if your client suffers a financial loss. So if there is a case, if this is the case, your cyber policy can respond with things like business interruption, which is essentially a coverage that will try to indemnify you wholly as you try to restore your company and get back up and running. One thing I do want to mention here, which is pretty huge, and I kind of alluded to it earlier in the presentation, contractual obligations, specifically on the B2B side. So you may be in the near future signing contracts with Fortune 500 or even Fortune 100 companies. I've seen requirements this week alone, I think, from Target and Amazon, which is really nice to see, these startups getting these huge contracts and opportunities. However, these companies will most often, or they may oftentimes want to see coverage like 5 million in cyber or 5 million in E&O before you even start working. This is a very exciting point in your early stage startup, and it's probably a pretty big contract for you. And you may be thinking, I need to have these coverages. I need to have the 5 million E&O. I need the 5 million cyber. So there's just two things I would like for you to think about in these instances. One is that the market is hardening for cyber. The market is hardening across the board, but definitely for the cyber product. And it can be very costly to have a $5 million coverage at this stage in your build out. Second thing to keep in mind is carriers are less likely to offer these limits if it doesn't make sense to have, or if you're pre-revenue, or even if you're new in business. I just always ask, does it really justify you spending 20 million or 20,000, on insurance for a contract that is worth 50,000? If the answer is yes, it's worth it. That's amazing. If you can afford that, that's great. I say go for it. If you want that contract, if you can't really justify that cost for the amount that contract is worth at the moment, it's okay to say, this is what I currently have in place now. Can you work with this? I often suggest a lot of the times you get ahead of these contracts. So as you begin to approach, or as you get to that point where you're going to begin to approach, customers, make sure you have your basics in place at least. That way, when they come to you and they say, hey, I have a $5 million E&O policy that you need to have, here's the sample certificate, and they give you that long laundry list of items that you need to satisfy, you can come back and say, I have 1 million E&O in place. I have 1 million cyber in place. According to my business size and profile, this makes perfect sense for me. I would love to do business with you, but if it doesn't make sense for me to essentially restructure my risk management program to work with you, it's going to end up costing me a lot. So most of the time we hear companies say that's perfectly okay. And it's a perfectly okay thing to ask for these contract holders. Often the company that you're working with will say that's fine. You already have some coverage in place. We'll sign off and you're good to go. So in the early days, having some coverage in place already will help negotiate contracts and even help with investors on the fundraising side. As you scale, it will be important for you to have these higher limits in place. If that contract jumps from 250,000 to 5 million in year 2, it's then appropriate to have that $5 million cyber program in place where you can now fund it. And it's appropriate to your size and profile. So the two main coverages here, and we'll get into them here in a second, are the error and omission and the cyber coverage. So the error and omission is what is essentially, as you're making your product or developing your product, it is going to address any error or omission in your product itself. If your company or if your client suffers a financial loss, that is when error and omission specifically triggers. Cybersecurity is pretty self-explanatory. It protects you things from let me slow down. It protects you from things like cybercrime, ransomware, fraud, data breach, etc. So error and omission coverage it has a few different forms. The tech error and omission will be most relevant to tech-based platforms and products, I'd say. Even if you're not mission critical, it's important to have, this type of coverage to address any errors in your product, errors in your code, errors in development of your software. As I mentioned, it specifically is triggered in the event your client alleges or has a financial loss due to your product not performing as it should. The second part to professional or to error and omission, I would say, is the professional lines or the professional E&O, which is geared more towards professions in the industry of law, of consulting, insurance. This type of E&O is designed to protect you from any human error you might come across while performing your paid services. So say me, for example, as an insurance advisor, if I go rogue and I start saying things that I don't really know for sure are factual, and someone follows that advice and comes back and sues Vouch or sues us, that would fall under the professional error and omission coverage. One thing I will also say here is that it's super important to note your risk is different when you're working with B2B versus B2C. I would say on a B2B side, obviously your exposure increases when you hit that key inflection point and go from 25 beta users, and now you have, you've launched your product, now you're at 5,000 beta users, or excuse me, users in general. Your risk goes up, and obviously so does the likelihood of your loss. On the B2C side, you sign your first large contract, and from their perspective, they are essentially taking a bet on a smaller startup. While your product may work perfectly fine, if they allege that there are any errors or that they were down because of the services that your product was supposed to provide, but unfortunately didn't, that can be pretty detrimental to a startup. Perfect example on a bit of a larger scale would be Robinhood. Robinhood, I would say, and other trading platforms that were offline for several days. There is a huge financial risk with your product going down if it is mission critical, not only with class action lawsuits, but also things like reputational risk that can be associated with that as well. As a startup, reputational risk, I think, is just as important. You want to make sure you're putting your best foot forward and you have that protection there in case something does occur. And in terms of cyber coverage, give me 1 second. I think I saw here. Okay, we have a question. Okay. Oh, it's Amanda. Perfect. I'll read that here in a second, if that's okay, Amanda. So back to cyber here. Data breach and cyber crimes, as I've been mentioning, are at an all-time high. It's become easier to commit these crimes because we are in that remote environment. And that unfortunately creates a higher risk. Some founders we've talked with, they're not quite ready to go back to the office yet, which is perfectly fine. And some plan to stay fully remote. So whatever works best for you and your team is great. And one thing I would just say is if you are in that remote environment and you do plan to stay remote, be aware of things like, phishing attempts. I'm sure we're all very well aware of that, but one thing I would recommend is with the prevalence of phishing attempts and all of the other creative ways hackers use to tap into businesses, practice good risk management tactics. Have two people look at your wire transfers if they fall over a certain threshold, just to make sure your money is going to the right place. One other thing here is there's a ton of training that you can provide for your teams, especially as you scale. You may not be fully aware of what your team needs to know, and that's okay. There are products out there that can help you do that and help your team get on the same page and know we shouldn't be clicking on, these phishing attempt links, and making sure your clients are all, or your employees are all on the same page. Vouch uses Ninjio, which I think is amazing and pretty fun to keep the teams posted on what's happening on the front lines in terms of cyber. So one other thing to note here on the cyber front, it is important to know that it's not just a financial impact that you have to deal with in terms of cyber. It's also trying to find out where that cyber breach came from. So the forensics that are involved in that, trying to find out where the breach came from and making sure that that problem is fixed so it does not happen again. A couple of components to cyber. So cyber is broken down into two parties. First party and the third party. It's really important to understand your risk from a cyber perspective. First party exposure can look like, your platform storing a ton of data you're trying to protect, maybe in the health space, the financial space, even private company information like PR. So you want to make sure you have adequate coverage here on the first party side. DoorDash here is a great example. They had a 4.9 record compromised breach, and it's pretty expensive to notify these individuals that breach occurred, give them credit monitoring, because I believe it used to be a year. I'm not sure how long it is at this point, but you do have to provide credit monitoring, along with finding out, like I mentioned, where that breach came from to make sure you're plugging that hole and assuring that that's not going to happen again. On the third party side, exposure can look like, you are integrating into a client's software and there is a hole in your code. It's possible for hackers to work their way into another software system. And I hear this a ton of times, where clients are saying, we're using third-party payment processing companies. There's still potential there, however, for this information to be stolen through a hole or a blip in your code. So I guess with that, I'd say, even if you are using a third-party processing center or third-party payment company, it's better to have a small amount of cyber coverage just to make sure you have that reassurance and backup. A couple of things to mention and note over to the left-hand side, ransomware, malware attacks, and then we touched briefly on phishing attempts. But the phishing attempts, like I spoke about in the last slide, and how you can put simple practices into play to make sure your team is up to date on what to do when a phishing attempt occurs. Definitely something to watch for as you raise your rounds of funding, as the attempts will be hitting your inbox, no doubt, pretty quickly. And then ransomware attacks, they scramble your information, essentially hold it ransom and ask you to pay XYZ amount. This actually happened in May of 21, I want to say, with Colonial Pipeline, the American oil pipeline system that originates in Texas. So the hacker took down the largest fuel pipeline in the US, and it led to shortages across the East Coast. The result of that was because of a single compromised password. They had to shut down their entire operations for the first time completely in 57 years. Something like that, while the likelihood of that to happen in the startup space, it can or cannot happen, but if it does happen, you want to make sure you're protected. So I believe this is the final one we'll be chatting about here, which is the investor side of, when the investor side approaches, milestone, I should say. So when we chat about the investor side of coverage, my thought here is, you now have a fiduciary duty as a founder to your investors, and you've essentially promised to make good on that investment. So we're going to chat about directors and officers and crime. The D&O coverage here, key milestones to obtain D&O coverage would be when you have outside board members outside of the founding members. 2, you have founders in highly regulated or litigious industries, or 3, you're approaching your Series A. So there are 3 sides to D&O. The first would be side A, excuse me, which protects your individual directors and officers for liability in the management of your organization. This covers you personally should you be named in a lawsuit by an investor for a decision you made on behalf of your company. Side B covers the company itself. So they're not just going to name the founder in the lawsuit, they're probably also going to name the company itself. So side B addresses the company. And then side C covers your board, your directors, your advisors, observers. And basically here, there's potential for coverage on any sort of IP infringement. Vouch specifically has a few endorsements that are unique to our policy form. I won't name those off now, but happy to take that offline if anyone's interested. But yeah, so pretty straight to the point coverage here. One thing I will state is, 40% of lawsuits come from regulatory and non-compliance when it comes to directors and officers. So it's very important to have D&O if you are in a regulated industry like finance, insurance, health, even ed tech. You will want to make sure that you have that coverage sooner and sometimes more of it. A good example here is Lambda School. Who did not register as an educational institution in the state of California. California mentioned to Lambda School, you are teaching for a price. You need to register as an educational institution. They had not at that point, and therefore had to pay back thousands of dollars to the Department of Education, to the state of California, for missing that pretty important milestone and knowing that they were in a highly regulated industry. So this table over here just kind of shows specifically what the D&O may look like if regulated versus non-regulated industries. And I believe Maddie can share our benchmark list with FFA after our chat and share just other benchmark pricing or totals in terms of other lines of business for reference. So we're going to chat really briefly about crime coverage. This coverage is pretty straightforward. It is meant to address any sort of employee theft, embezzlement, wire fraud, transfers, things of that nature. If you have any outside individuals handling wire or cash flow transactions aside from the founding members, I would recommend you have this coverage. Also, at the point you raise your rounds of funding, definitely important to have. I can tell you a quick scenario here that actually hit very close to home with a company I worked with in my past life. This company had an individual who was the controller of the company, so naturally had access to all of the accounting related materials and activity. They knew exactly what was going on there. And this company was scaling pretty quickly. It took them 2 years to find out that this individual had actually he had actually done 35 wire transfers from the company's account to other bank accounts, shell companies that this person had created. And they purchased everything from cars to real estate, and stole a total of 5 million in company funds by making just false entities in company records, creating fake emails, making false statements. So I believe, the third party audit company that was assisting in just auditing the financials of this company for those 2 years got wrapped up in the lawsuit as well. Once a suspecting accountants had kind of made this known, the individual was obviously arrested, and it's still an ongoing case. But just something to keep in mind, as you scale and as you grow, when you're in year 2, year 3, year 4, make sure you have the proper coverage in place to not be looped into something like this. And if you are, make sure the proper coverage is in place to address that type of loss. Can also cover things like tangible property. So computers, tablets, laptops, computers, tablets, cell phones. There you go. Other common coverages that I can say pair well with some of the coverages we've already discussed are things like hired and non-owned auto. This is helpful to add to your business owner policy. Excuse me. If you have employees who are using their vehicles to interact with clients during, for business meetings. If your employees are renting vehicles for company events, if they use Ubers or other ride sharing apps, can be helpful if there's any sort of loss or injury, technically while traveling for work. Fiduciary employee benefits, I would say, doesn't make the most sense to have right away. This is more so for when you've built out your HR team and you're handling that in-house. If you have an individual administering employee benefits or 401k plans, this is something you will want to get at that point. Media liability is more so for organizations producing original content that can be susceptible to things like libel, slander, defamation, copyright infringement, and things of that nature. So now comes to the fun part. So Female Founder Alliance has actually partnered with Vouch. Obviously, that is why we're all here. And we're able to offer an initial 5% discount to Female Founder Alliance women who are coming to the platform and essentially signing up just to check out pricing even. Feel free to sign up and chat with us. One thing I will note, and something I did want to make pretty specific. So we may not be live in all of the states that you currently are sitting in or you're incorporated in. It is perfectly appropriate. So say, for example, you sit in the state of Washington, but you have an executive who sits in California. It's okay to list that executive's address to base the policy in California. You will still have a domestic-wide or worldwide coverage territory. We just need to base the policy in a state that we are live in. So just a friendly note there. Happy to run past a list of states we are live in for your convenience and just like ease as you're starting the insurance process. Oh my goodness. Excuse me.
It's okay, Amanda. You were just talking for 49 minutes. You're good.
I should probably wrap this up pretty quickly. Definitely, these are the key coverages. I will definitely send over more information. Excuse me, to Amanda and S to share. I don't know what just happened to my voice. This is so weird.
Don't worry, it's okay. I can speak for you if you want to take another sip.
Can you please?
Yeah, so we will absolutely send a follow-up email, most likely coming out on Friday. We're going to send a note to all of the registrants. So those that also registered that were not able to attend, we're going to share the deck. I'll include the material that Maddie's also going to send over. We will include a link to Amanda's Calendly link, so you can schedule time directly with her. And I recommend in the interim, feel free to go and visit our branded landing page as well. Vouch has been a phenomenal partner of ours. They're going to also come back and provide programming to our accelerator later this year. So we are excited to have them along for our journey as we grow and also for the founders as you grow. Amanda, I do think there were just a couple questions that I can read real quick. And if we want, we can include the answers in the follow-up. Was just which, how does insurance protect reputation? And then we had a question from Rachel around, how do you think about incremental coverage needs, starting with a closed MVP, then mobilizing for a $1 million raise?
Yeah, no, those are terrific questions. I'm happy to take those in the follow-up. If it's okay, I would love to address also the pre-submitted questions that were sent over as well ahead of time. And we have about 10 minutes, so I think we can get through a majority of these. So the first question that was submitted is, what are the deciding factors for whether each of the policies you offer are must-haves versus nice-to-haves? And unfortunately, I'm going to give you a very insurance-like answer. And that's just, it depends. There is unfortunately no one-size-fits-all response here. I think after the presentation, you can find value in this response as each company has its own unique exposure. This depends truly on your stage, your profile, and of course, the industry in which you work. What I'd recommend for, fintechs off the bat, which would be like cyber, E&O, and D&O, would be different from what I recommend for a SaaS-based company or a marketplace, which would more likely fall in line with E&O or GL. It's good to understand what your clients are doing in the industry, so it helps us as insurance advisors help you better. I would definitely recommend having, a one-on-one if, you have the time, or if you don't. Vouch is super, I would say self-serve friendly. You can always pop into the application, complete the application, and our portal is actually designed to make recommendations to the specific responses that you've indicated on your application. So I hope that's helpful. And I'll go ahead and go to this next question here. What insurance do I need to get started? What insurance do I need to get started out with when I am remote? Another good question here. What strikes me off the bat, I would say, is general liability with some property coverage or a business owner policy. We do have what's called a work from anywhere endorsement. This also, of course, making sure that your workers' compensation is in place, but the work from anywhere endorsement is really meant to protect your business assets as you're spread remotely. So if you are a fully remote company based in California and you have some employees in, different states, you have some employees in California, you want to make sure your business assets are covered. So that's just one of the basic coverages. Again, depending on what industry you're in, would definitely make more recommendations geared towards the industry specific type of coverages. That tickle's coming back. Give me 1 second. Excuse me. How do I think about insurance needs at the MVP stage of the business, and how do insurance needs evolve as the company grows. So one thing I will mention is, similar to what we talked about in earlier slides, during the MVP stage, you have your core product complete, you have a handful of users, you may still be making revisions once you've gone into soft launch or beta testing. Once that's complete, my best recommendation is to start with low limits, limits that are appropriate to your size and profile. So I would say definitely having like a consultation or a one-on-one with your advisor or, your broker would make the most sense. But the way your coverage is going to change and the needs is they'll eventually start to grow, while contract holders and businesses at the MVP stage might be asking you to have that 5 million in coverage of E&O, cyber, GL, whatever the request is there. It's important to know that you don't need to have that coverage, but you will probably need it in the future. So it's okay to start small and scale. That is probably my best response there. What should a company get in terms of insurance? Is another question here. As I mentioned, workers' compensation is mandated by law, so you will need to have that upon hiring. For most companies at beta stage testing, it's good to have some sort of coverage versus no coverage. If it's not something you feel is a priority at that point, definitely when you launch your product, take it into very serious consideration. Chat with Vouch so at least what the pricing might look like when you do need to have that and put it in place pretty quickly. Another question here, when would a company make a claim on their insurance? So a company can make a claim really in any scenario that arises where they feel they have or potentially have coverage on. It's important to note that most insurance policies require you to report an incident upon just knowing that one has occurred. For example, cyber, you are aware of a cyber breach that occurred. Definitely let your insurance carrier know immediately. This is mostly because we want to help prevent future damage and potential lawsuits from occurring. Other policies, however, can be written on what's called like a claims made basis. So that means, say today something happens and you're covered through an E&O policy or a D&O policy. 3 years down the road, you find out something happened on September 29th of 2021. You can still come back and file that claim. So it really just depends on the type of policy you have and also the type of claim. A couple of industry specific questions. So the first one here is, what are the key liability issues for data/AI companies? What are the changing trends in the risk management across border or globally? So again, a very insurance-like answer is there is no one size fits all response here. Different coverages are designed to respond to different types of claims. That's why initially I mentioned it's important to have your carrier or broker know exactly what type of business and services you're providing. Cyber, I would say, is definitely a data and AI coverage that you might want to start with. Some of the key variables that would determine that recommendation would be, the data that is ingested. How sensitive is that information? Is it protected health information? Do you store email addresses, payment info? Controls that you have in place to encrypt this information. On an errors or omissions side, some of the key variables there would be your distribution model. Are you B2B, B2C, B2B2C? So it really just depends. And then of course, employment practices, which is As I mentioned, one of my favorites, and oftentimes, not immediately required, but essential for companies that anticipate rapid growth. I know we have about a minute left. I know there are more questions, so happy to send them over to Amanda and S. But I will hand it back to S to kind of wrap things up here.
Yes, awesome. Thank you so much, Amanda. This is super informative. It looks like people really appreciated the presentation, so thank you so much. And yes, so everyone, like Amanda Elder said before, we will be sending a follow-up email with the deck and also some additional information and answers from Amanda. But with that being said, thank you so much for joining us. Hope you all enjoyed this session, and have a great rest of your week. Thank you so much.